Listen to this, guy. So, a Wells Fargo analyst just downgraded Tesla from $200 per share to now $125 per share, and they have a sell rating on the stock. I believe that's actually a 38% price cut from, again, $200 to now $125 per share. So, I want to break that down in this video. And of course, we're going to break down the charts, my thoughts, where I'm looking to buy Tesla stock. So, hit the like button. Feel free to subscribe, and you might as well follow me on X and on TikTok. Those are linked down below. And with that being said, let's dive right into the video. So check it out. It's about, what time is it? 11 a.m. on the East Coast. So we're about an hour and a half into the session today, and we have Tesla down almost 3.5%. We're down $6 per share on the day, and we're holding above $170 by a thread. You guys can see here we hit $170.60 just about a half hour ago. Less than that, more like 20 minutes ago, and we held that for a little bit. Now we're rallying a bit to about 171, but either way, guys, we broke the lows here from a couple of days ago, roughly 172 to 173, and we can see now we're falling through $175 per share, and the descending triangle that we talked about in the last update here on Tesla stock is starting to play out, which we'll talk about here in a second. But first, let me actually pull up this article so we can see what's going on with this analyst, where his head's at, all that good stuff. So you guys can see, based on the headline here, sell Tesla stock. Analyst slashes target 38%, saying the EV maker isn't so magnificent, which I guess that's a play on the Magnificent Seven, since Tesla is in the Magnificent Seven. You guys can see here, let me come down a little bit, and actually let me make my big old head a bit smaller. There we go. So we can see here, Wells Fargo analyst Colin Langan is the bearish analyst. On Wednesday, he downgraded Tesla stock to the equivalent of sell from hold, and his price target went to $125 a share from $200 a share, down almost 38%. That's quite the reduction, guys. I mean, some analysts, when they, reduce their stock price, they go from 200 to 195 or something, or from 200 to 190, right? Sometimes the reductions aren't that crazy, but in this case, guys, man, that's a pretty big reduction there of 38%, right? So let's read a little bit more here. We can see here, he said, Tesla, quote, ain't looking so magnificent, end quote, wrote Langan. He said, we expect volume to disappoint as price cuts are having a diminishing impact on demand. Lower deliveries and vehicle prices drive our 2024 earnings per share estimate 32% below consensus, which, man, this guy has to be one of the more bearish analysts that I've seen. He said his numbers are jarring. Langan now projects 1.8 million deliveries in 2024, essentially flat with 2023, and he doesn't project any volume growth in 2025 compared with 2024. As for sales, his 2024 and 2025 sales estimates are now about $91 and $96 billion respectively, down from prior projections of about $102 billion and $118 billion, and below the Wall Street consensus of $110 and $131 billion. So talk about a bearish analyst. Again, let me say this one more time. He thinks for sales for 2024 and for 2025, they're going to be $91 and $96 billion respectively, whereas Wall Street expects $110 and $131 billion. We're talking about a massive difference here. And keep in mind, Tesla generated about $97 billion of sales in 2023. So essentially, this guy, Colin Langan, believes their sales are going to be flat for 2-3 years in a row. $97 billion in 2023, $91 billion in 2024. So they're going to decline in sales $6 billion this year that we're in right now. And then in 2025, it'll rebound. The sales will jump from 91 to 96 billion, but still flat from what we saw in 2023, which again, 97 billion is that number. So he's pretty bearish, guys, to say the least. And when it comes to EPS, let me show you this. Langen's 2024 EPS estimate for, let's see, for now it is $2, down from the $2.40 recently that he had. And it looks like the consensus call aggregated by FactSet is $3.03, and Tesla generated adjusted EPS of $3.12 in 2023, and his new EPS for 2025, his estimate is $1.90 a share, and the Wall Street estimate is $4.16. So, yeah, needless to say, guys, he is super bearish right now, and all that Langen says is Tesla is a growth company with no growth. Tesla stock, of course, is treated like a growth stock with shares trading at almost 60 times 2024 estimated earnings. And the reality is, yes, there is no growth right now. It's slowing down. I mean, it grew so massively over the last couple of years. There's growing pains right now. We're slowing down a bit, and a lot of investors still suspect that we're going to see that next huge wave in growth, and clearly Langen does not believe that, right? We can see here Langen doesn't see much help coming from Tesla's lower price vehicle, often called the Model 2, due in the second half of 2025. For starters, it's taking too long to hit the roads. The profitability of compact vehicles can be a challenge too, and Model 2 gross profits look low, he added, and Cybertruck-inspired styling and competition are also concerns. He isn't feeling very optimistic about Tesla stock, obviously, and Langen did point it out, or he pointed out in his report that better than expected margins and faster than expected improvement in autonomous driving technology are two things that could make his call wrong. So keep that in mind. That could make his call wrong. So yeah, that's a bearish view here from Colin Langen. Again, he's a Wells Fargo analyst who cut their price target from $200 to $125 per share. And coming back here to the charts, guys, and by the way, let me know in the comments, what do you think about his call? Do you think it's going to go to $125? Do you agree with this analyst from Wells Fargo? Disagree? Let me know in the comments down below. And in the short term, man, it does look like Tesla is seeing weakness, right? We are starting to see that descending triangle play out. And like I said in recent videos, in the last video, I think yesterday I made an update on Tesla. We talked about how if this plays out, 150 to 125 could be next. And it's all in the charts here, guys. We can see back in April of last year, we hit 150, then we rallied to 300 and essentially 2-3 months. So we doubled up like that, which is nuts. And now it looks like that's the next major gap to fill on the downside. That's if we break 170, which, let's be honest, it's looking like Tesla wants to do that as of now. And if we do break 150 on this 3-year chart, we can see how, 100 to 125 could be after that. Considering 100, that's where we held in, it looks like, the end of 2022, early 2023. Then, of course, you guys know we rallied off that point. So, yeah, that's where Tesla could be going. What do you guys think about that? And the analyst from Wells Fargo, let me know in the comments. And like I said in my video yesterday, I'm looking to buy more, ideally, or not even buy more. I don't own Tesla now, but buy in at 100 to 125 bucks. Ideally, that'd be great, but I wouldn't be opposed to nibbling a bit at 150 either. That's my opinion, right? So yeah, let me know your thoughts in the comments. Feel free to hit that like button, subscribe, and don't forget to get up to 15 stocks for a moo by using that link down below. I also have a QR code right here, guys, on the screen. Make sure to check that out. Once you open up your account and fund it with at least $100, you get 5 stocks, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks, and each of those could be valued up to $2,000, and the clock's ticking, by the way, so get on it. Use that link down below. And with that being said, cheers. I'll catch you guys later.